that guy from Citibank, all he's telling us is that Citibank is massively short gold and they need to cover that $1,000 lower, and they're going to try to do whatever they need to do to get the gold price down to be able to buy back their shorts at a lower price. They will fail.
Ladies and gentlemen, the time flies. I welcome the Egon von Greyerz again in front of gold. Everything goes around oil, of course. This time, I think we are in the middle of a chain reaction approaching. Good to see you.
Yeah, always good to see you. Yes, I think we're at the end of a storm, but the storm hasn't begun yet. You know, the high point of the storm is still to come, and you know, we're in the midst of history now, and very, very precarious history, where we all should be concerned about the outcome. So certainly interesting things to talk about. Luckily, you and I can't influence them. But we certainly can help people to try to navigate the best we can through this storm.
That's the point, Egon. If you see this word coming, you have to warn the people, and that's what we are doing. We all know Israel attacked Iran, Iran shot back, and so it goes back and forth. JP Morgan published a study where they still expect $60 for oil, but it could go to 130. I will read from this study a few sentences. I think this 130 is much too conservative. In a note published Thursday, the bank said it sees oil averaging $60 in 2026, but flagged 120 to 130 per barrel as a potential range in the event of worst-case outcomes, namely military conflict and a closure of the Strait of Hormuz, through which 1/5 of global oil flows. And there I have already the next news from Iran. The most concerning sign of a potential maritime disruption in the Strait of Hormuz emerged in the overnight hours via a statement on X by former Iranian economy minister Qadusi. Quote, starting tomorrow, today, for 100 days, no oil tankers or LNG cargoes will be able to pass through the strait without Iran's approval, Qadusi said. I think, Egon, the oil price is now completely unpredictable because the Strait of Hormuz, as you also said it in the past, is a key price determinant for the oil price. And I even would expect a worst case scenario that the whole Muslim world unites against the West, and that is a total wild card. What do you think?
It's very serious, Jan. I've seen other oil price figures like derivatives, head of derivatives trade on the oil side in Goldman Sachs have been talking about $800, for example. You know, we can all forecast the price, but I think talking about just $130 or whatever is much too low. I think this was because this also indicates a massive conflict, and you know, it will shoot up very high. It'll come back a bit, but you know, oil is a war commodity, and it is not just a question of energy, but it's also a very geopolitical commodity. And you know, you have now said, on the one hand, you have the whole of the West. It's about at least 25% of the global production of oil comes out through the Strait of Hormuz. And then, of course, you have also the sanctioning of Russian oil that still makes its way out, but with more and more difficulty. China is still buying, of course. So it is a very political commodity, but it's not just the oil, you know, that because the oil going up like that. If there is a crisis, serious, there is a crisis already, but if it becomes really serious, and Iran is waiting there, they have missiles, they have everything by the Strait of Hormuz. Then of course it's the whole financial system will be at risk. And you know my old discussion and articles about the derivatives. I think they're not just 700 trillion like the BIS, Bank of International Settlement in Basel, saying. I think we could be about 2 quadrillion or so, because they changed the valuation, I think, and I think the real figure is probably in the 2 quadrillion. derivatives, a lot of that is actually becomes credit loans, so or debt. And this is something the world cannot cope with the debt as it stands today. And if we get hit by that massive speculative instrument, there was it called financial instruments of mass destruction. It was Warren Buffett who called them. They really are. They really are. And I think that risk nobody takes into account, but that it is there, and it will explode if there is a major conflict there in the Middle East. So yes, we have to be very concerned, and we have to be very concerned with the US is totally involved in this from the beginning. First they denied it, and then they said yes, we are. Obviously, Iran couldn't attack, so couldn't be attacked in the way by Israel that it was without total help of the US. And then the US is an aggressor, and that will have serious consequences. You remember, it's not just the Arab world, as you mentioned, that will, of course, protest against it around the world with riots, with terrorist attacks, etc. But the friends of Iran are China and Russia also, and that brings us into a global war, a world war potentially, and a nuclear war also. We obviously hope that it won't happen, but the risks I have never, obviously in my lifetime, and I've been around for a while, I've never seen risks of this magnitude. So we can't do much about it, except for we'll have to help ourselves and a few people to protect their wealth. But otherwise, yes, we just have to pray and hope that is not going to develop in the way that it looks today on.
When we talk about these developments for quite a while, and a sudden increase in the oil price could be, as I already said it, a real catalyst. We would see suddenly jumping up inflation, impoverishment of the masses, and of course, the bubble assets will quickly burst. Or am I too pessimistic? I think all this will come very suddenly.
Yeah, I agree with you. I think stocks are going to go down 90 to 95% at least against gold. So will property. Bonds will collapse also. People are going to be shocked what's going to happen to their wealth if they don't protect it in the coming months and years.
And the process is already ongoing, Egon. I have only two examples here, China and the USA. Here is number one from Reuters. It's simply about Chinese who are saving money. They buy used goods, and expensive goods remain in the overpriced stores. And there's another one. I can only highly recommend this article, very comprehensive about the Chinese economy, and it looks really dire for them. China will have no other choice if the private consumer cuts back than to launch big government programs. And what used to be the best option, best in brackets, option all the time, war spending, armaments. I think with an oil crisis emerging, the likelihood of an attack, China against Taiwan, also increases. What do you think?
That risk is always there, and one day China will annex Taiwan. There's no question about it. But they're not in a rush. Their ultimate goal is very clear. They will take Taiwan, and I believe that. That's what they've said. But they don't care if it's 10 years from now, or it doesn't have to be tomorrow or in a couple of years. It could be later. And they probably would do it at the point when America is weak, not when America is in a war mood like they are now. Maybe when America is occupied elsewhere or financially weak or politically weak, that's when they will do it. This is the thing about China. We've got to realize that they don't plan for the next year or for the next 4 years like Trump and trying to take thousands of executive orders or issue executive orders to make a lot of short-term decisions that will be reversed by the next president. Only short-term thinking. Short-term gratification with no long-term goals, as opposed to China that plans for 100 years or so. Yes, Taiwan will fall one day, but no hurry. They have more imminent problems. And of course, if the world will suffer, and if these tariffs continue, China will suffer like everybody else. The big advantage they have is that they control their financial system quite well, so they are not dependent on world markets and borrowing on world markets. So although they will suffer, they can sort it out internally, and everybody has to tighten their belt, but they're certainly not dependent on anybody else freezing their monetary assets or stopping them from doing things internally. So they're in a strong position, and whatever crisis we will have of whatever magnitude, and it will be big, that's for certain, China will be one of the first coming out of it, and so will Russia and India, whilst the West will suffer for a very long time with their debts.
Right, Egon, but different story in the USA. They are dependent on the world and the world on the USA, vice versa. Their credit card debt went over 1 trillion, and I saw something interesting at the chart here. Seems to max out. If I go to 1 year, we see this. So it might be not a trend change, or it might be, but as I just said, the consumer seems to be maxed out and is cutting back. And another argument for this assumption is, for instance, that cars get older and older. An article will be in the description box as well. I read from this one, according to data from S&P Global, the average age of vehicles in the USA has reached a record high 12.8 years in 2025, up from 12.6 years in 2024. So, and then, of course, we have the state debt out of control, and Powell did not lower the interest rates yesterday. So, suddenly, with an increasing oil price, we will see a dramatic acceleration, and that will hit the US in particular. And with it, the bond bubble, the banks, etc. As I said at the beginning, a chain reaction.
Yeah, absolutely. And these tariffs, will have a massive inflationary effect on the US also. I mean, all cost of all goods is going to increase dramatically, especially from China, obviously. If China produces the best and the most efficient electric car there is, and they're the biggest producer in the world, the BYD. Of course, the American market is closed for them now. And that means that America has to produce more expensive cars that are not as good as the Chinese anymore, which is a fascinating turnaround to what was there before. But China has a big export market anyway. The rest of the world takes the Chinese cars, so it's the US that will suffer, and US economy will become less competitive, and with higher inflation, and that's going to be a real dilemma for the problems that they already have in the US.
And even with these prospects, we have to talk about gold and silver, of course. The red lights are on, and you published something on your Substack page, and that was a typical example of misleading information by Bild or Blöd. Let's look. We talked about that last time. I also spoke about that in my top news report. And as the headline says, ECB warns of gold collapse. What you have to know, but it's not about a collapse of the gold price, it's a possible collapse of the gold market because of the derivatives and because of too many people demanding gold, which is not there. So completely misleading here, which means, on the other hand, get your gold now, right?
Well, this is, this is such a ridiculous headline. It is, they wanted to be read like a gold price is going to collapse, as you said. But of course, we know that in Europe and in the US, the futures markets and the banks, the banks have even bigger futures contracts outstanding. I mean, it's at least 100-to-1 leverage, physical against paper gold. And as more and more people ask for delivery, and as central banks are continuing now to buy and buy physical, there will be massive shortages. And we talked about it for a long time. They've been very skillful, the cartel, the LBMA, the bullion banks, and the central banks, in holding the gold price down with the help of these derivatives. But as the world asks for delivery, the gold is not going to be there, and that's when we will see gold going up by multiples. That's going to come. This is not from a gold bug who's, optimistic on gold for the sake of it. There's someone who's very pessimistic on the world and the world economy and the amount of money that will be created and printed, which means the debasement of the currencies, which means measured in currencies that gold will go up because the currency is going down. And on top of that, as you just showed, there will be the increased demand from all corners of the world, central banks, from institutions, etc. Remember that the average investment in gold today is only 0.5% of world financial assets. That will increase, but there's not more gold around, and especially if demand increases, there'll be pressure on these paper short golds to deliver, and they can't deliver, and this is when gold will go up by, as I said, over time by multiples. So as you said, on the time to get your gold is now, because it's still very inexpensive compared to what it will be in the next few years. So there's a short squeeze of gold shorts combined with a massive demand of physical. That bodes very ill for the people who are now short gold, and for the bullion banks and for the central banks. And this is why, which means there's going to be massive upward pressure on the gold price. And you've got to own your gold now, and you have to own your silver now, which of course the silver market is even smaller and will go up a lot faster than gold. So, but it has to be physical, and of course it has to be stored outside the banking system. You're protecting against a fragile or bankrupt banking system, and you must obviously not hold it in any paper form or within the banking system that you're trying to protect against. That's so obvious. So please protect yourselves as much as you can, because that's one way to at least survive the financial crisis that we will have in coming years. We can't do anything about the political crisis. It's hard to protect yourself against that, but at least financially you can, and please do.
Absolutely, Egon, I agree. And you gave me the keyword central banks. I found here an article on Bloomberg. They state there that more and more central banks are continue to buy gold. Quote, a record share of the world's central banks plans to accumulate more gold over the next 12 months, drawn by bullion's performance during times of crisis and protection against inflation. In a survey of 72 monetary authorities, 43% said they expected their gold reserves to increase, up from 29% a year earlier, and the highest figure in 8 years of data collected by the World Gold Council and YouGov. None anticipated a decline. They clearly know what's coming, although it's for Joe Sixpack or to Normalverbraucher now more and more difficult to buy gold at 3,000 plus. But as you said already, Egon, silver is a good alternative for small money. I recommend it also. Just made a new 12-year high. I recommend people who have little money to buy some silver now.
Yes, I mean, I think everybody could hold some, even if they hold gold, have some silver if you can afford it. Of course, at this point, per ounce, an ounce of silver costs almost 1/100th of an ounce of gold. So of course it's a very inexpensive metal, and it's a metal that is produced in relatively low quantities, and it's a metal that is also very much industrial, and therefore there are no surplus stocks of silver, and this is why an increase in demand will lead to a real price squeeze, and silver will go up 2-3 times as fast as gold, at least in the next move, in my view.
At the end of our discussion, Egon, I have some price prediction, sound or stupid. You decide, our viewers. First of all, I have JP Morgan. They are expecting $4,000 by 26, mid 26. But this now, here is the kicker, the Citibank. They write, Gold is expected to sink back below 3,000 an ounce in the coming quarters as a record-setting run peters out, according to Citigroup Inc., calling time on one of the standout rallies in commodities. Our work suggests that gold returns to about 2,500 to 2,700 an ounce by the second half of 26. Analysts, including Max Layton, said in a report, the slump may be driven by weaker investment demand, improving global growth prospects, and rate cuts by the Federal Reserve. They said, what should I say, Egon? I should ask that guy, what is he smoking? Is that insane? We have other predictions by John Paulson, 5,000, 7,000, Charlie Morris, Kiyosaki, 25,000. My conclusion is any predictions are not serious. Just get your gold, keep it. With the things ahead of us, you can only buy it and hold it, right?
That guy from Citibank, all he's telling us is that Citibank is massively short gold and they need to cover that $1,000 lower, and they're going to try to do whatever they need to do to get the gold price down to be able to buy back their shorts at a lower price. They will fail, in my view, because gold is not going to be kind to them. Gold is in a very strong uptrend. It's more likely to accelerate here to much higher levels. I've stopped giving predictions some time ago because I think it's ludicrous to give a prediction in paper money, and you don't know what the value of the paper money will be at the time. So that's why all I'm saying is, because of the fundamental and technical situation that we're seeing for gold, and the geopolitical situation, and the continued massive increase of debt, and therefore debasing of currencies, and the central bank's move of their reserves out of US dollars into gold also. Because of these factors, gold is going to go up by multiples in coming years. And I feel quite strongly about that. And in any case, it's not the increase that you should think about. You should think about instead protecting your assets. And gold is one of the best ways, probably the best, to protect your assets or insure against the risk that we see coming now. You know for certain that you are going to maintain your purchasing power and maybe even enhance it, because gold will probably go up by more than inflation with this scenario and all these factors in its favor. So we are going to see a permanent re-rating of gold. As we have said before, Jan, gold is nature's money, only the money that has survived. And therefore, it's not a question of a commodity going up too fast and too much. It's a question of a total revaluation back to where it used to be, that is gold being the only real money and that there is. Therefore, gold's value will now change dramatically and permanently for many years to come, in my view.
I agree, Egon, and we must not forget that there is still no panic at the markets. The Dow Jones, 42,000 still. The bond market still more or less in order. This can change overnight with this emerging oil crisis that I see coming. So act now is the urgent suggestion. Final statement, or otherwise, thank you for today, Egon.
Thank you very much, Jan. Always good to talk to you. See you soon again.
Always a pleasure, Egon. See you soon. Enjoy Sweden. Bye-bye.